MSCI creates indexes, risk management products, and analytics for asset managers in both public and private markets. And at the end of last year, more than $16 trillion US globally was tied to various products, including indexes calculated by MSCI. So it's a major player in setting investment standards and benchmarks. We're joined by the Chairman and Chief Executive Officer, Henry Fernandez. Henry, thanks very much indeed for joining us.
Thanks for having me.
Just give us an idea. Where do you make most of your money at MSCI? I know you're very diversified, but what are your main businesses?
So the company as a whole is, as you describe it, an investment tools or investment infrastructure company that serves about 8,000 investment institutional clients in about 100 countries. The product that we're well known for are equity indices that measure the performance of markets. So that's about little over half of the revenues of the company. Another quarter comes from our risk management and performance platform. Another, say, 10%, 12% come from ESG and climate, and the balance from private assets.
And it's a fascinating story. You, I believe, took the company public about 18 years ago at a much lower stock price. Just give us a bit of history of MSCI.
Yeah, so I created the company about 30 years ago inside Morgan Stanley with two shareholders, the Capital Group of Los Angeles and Morgan Stanley, with a view to create a diversified, comprehensive investment tools company for the institutional market. So we were private inside Morgan Stanley and the Capital Group until about 17, 18 years ago. And then we separated from Morgan Stanley and the Capital Group in 2007 and took the company public, and it has been independent and public ever since.
Just looking at the stock price, over the past couple of years, it's been fairly flat. Now, I understand this is a malaise affecting data software companies, generally people uncertain about the effect of AI. Why is that, though? I mean, the shares haven't done much since 2024.
They haven't indeed, and I'm not too happy. As the largest individual investor in the company, I'm not too happy with that either. And a lot of it has been that the active asset management industry, which represents about a little less than 40% of our total revenues, has continued to be an industry under significant pressure in terms of outflows, high cost structure, and consolidation. And the second headwind for us has been the ESG business. We clearly were a big beneficiary of that. But I think we are now taking major steps on reviving growth and hopefully share price by expanding into private assets, expanding into more index investing, and expanding into other client types, such as wealth managers, banks, insurance, GPs, and the like. So we're very hopeful and very optimistic that we're going to get back on a high growth. We've always been high growth, but on a higher growth path, and hopefully the share price will recover.
I want to hear about your new businesses in a second, but I'm just dead curious. The rise of ETFs must have been great for you, because an ETF needs a benchmark. What are we going to put in the darn portfolio?
Yeah, so that is, we can talk about the headwinds, but for sure, one of the major tailwinds has been index investing, especially ETFs, but also institutional passive investing or index investing. That grew about 17% year over year in the last quarter. And we now have almost $6.5 trillion our clients have $6.5 trillion in index investing directly linked to MSCI indices. So that has been a major tailwind for us, and it's been the part of the company that has been growing pretty fast.
You said this is very interesting. You talked about moving into the private equity area. I guess that's tricky, isn't it? Because by definition, these things aren't publicly posted every day. But there must be an urgent need for benchmarks in private investing too.
Yeah, so if you're a global asset allocator, such as the Canadian pension funds, for example, they end up investing in public assets because they have transparency and liquidity. And likewise, they don't as much on the private assets because of the same, they lack transparency and liquidity. MSCI is out to change all of that. We are already providing major product lines to shed light into the transparency of all these funds. And over time, we're going to help with liquidity, not because we're going to be market makers, but because we'll be able to derive and supply valuations of the underlying holdings of these public assets, I should say these private asset class funds, so that people can create bigger secondary markets on them. So that's a big area of expansion for us.
We're very tight for time. Just tell us, are you seeing any trends among Canadian investors right now or anything interesting in the Canadian market?
For sure, the biggest trend is what the Canadian pension funds call the total portfolio approach, which is a really next evolution of investing. Instead of focusing on individual asset classes only, focus on the entire portfolio and how you can allocate assets across the portfolio more seamless and more rapidly. And we are creating products for them.
That's an interesting area. Thank you very much for giving us your time today.
Thanks for having me again.
Henry Fernandez, Chairman and Chief Executive Officer at MSCI Incorporated.